Well, the market's come to another close, and tomorrow is the next big day with non-farm payrolls and unemployment rate. And I'll show you what the market looked like at the close. And I'm also going to give some commentary, by the way, on what we have to look forward to, not only tomorrow, but over the next 2 weeks in terms of the catalysts that are coming our way. And in terms of dad jokes, I'm actually wearing the dad joke right now because today was wear a t-shirt representing a band, and I don't honestly have any music t-shirts, but this is a plain white tee. So hey there, Delilah, let's get right into it. So let's kick things off with the CME Fed Watch tool to see a little bit of what happened today. So actually, I'm sorry, Atlanta Fed GDP now is where I want to go first. We'll get to the CME Fed Watch tool in just a moment, but check this out. We have two data points, one from yesterday, one from today, from up at 2.4% GDP for Q2, setting up that whole one-off narrative for Q1 being just a fluke. And yeah, it was negative, but look, we don't have negative GDP. So now we're into growth in that second quarter. So no recession. And then today dropping down to 1.1%. And I said that this was going to be volatile because this is a very early measure so far. And right there's some of that volatility that we see. Well, May the 6th is actually the next thing that we get. Well, what is May the 6th? Well, that happens to be the balance of trade numbers that we get, which was pretty strongly negative. And what we have when it comes to GDP is you have the exports that add to GDP, you have the imports that subtract from GDP. Well, that is one of the main contributors that we had for the negative reading that we got in Q1. And mind you, this says March. When we look at this, and March is still before what we had for Trump's Liberation Day on April the 2nd. So this is maybe something that could be quite, if I'm thinking of it correctly, if this is something that even though it's Q1 numbers, if it still impacts the projection for Q2 for the Atlanta Fed GDP now, well, we absolutely want to watch this because there's a potential that gets dragged down even lower. The market hates it even more. And now, mind you, that's May the 6th, which happens to be on a Tuesday. Well, what's the very next thing that happens? Well, here at CME Fed Watch tool, 5 days away. That happens to be, let's see if I can click on this here for you. May the 7th is what this says up here, which is the conclusion of the Fed meeting. So the Fed meeting starting on the 6th, ending on the 7th, and we have 2 p.m. is when we get the results of that meeting. It's almost expected completely, entirely by the bond market that no cuts happen. A cut early on from the Fed wouldn't necessarily be a good thing because that could show further weakness than what's already expected to be there. So that could be sort of a quasi good thing, but kind of a bad thing, at least initially. Well, talking about today's sell-off that we had, well, if we look at the federal funds rate in terms of when is that easy monetary policy coming? I kept talking in my previous videos for months now about the 4 pillars that prop up markets. And one of those pillars happens to be easy monetary policy. And what we see is a 10% shift by the December 2025, according to the bond market, of that likelihood for how many cuts it is that we're going to get. So on the longer tail end of things is where we're really looking for that. So putting this back up here for you, what did we have? Well, we had a 41% chance and then 32.5% chance of dropping all the way to 3 to 3.25%. That 10% has been stolen from the 3 to 3.25 and kind of put in place, shoved up to the 3.5 to 3.75, which means that this candle or this bar right here is now a lot lower. This one is now a lot higher. And as you go up here, that means less Fed rate cuts that are being expected to come into place. And so what else do we have then for the Fed? Well, what we want to prop up the markets, I should say, what we want to prop up markets is strong GDP. And right now, GDP is sort of weak. Monetary policy not quite easing. The market, even though it was a good day today, is still selling down a little bit into the close. So we're still up 1.3%. Not bad, but well off the peak that we were at leading up to that number that came out from that 2.4% down to that 1.1% that we saw on the Atlanta Fed GDP numbers that are right here. So let's look forward from here into some other catalysts because this balance of trade could pull stronger negative if there's even more imports. And then we also have to look at the exports that happen to be there as well. So if that balance gets further shifted toward the import side, that's more of a drag on GDP, which could lower the numbers that we see for Q1 for that second estimate that we get. And it might also impact what we get from the Atlanta Fed if they're using the March numbers for projecting into Q2 as well. And I believe that number gets updated. Like I said, May 6th is the date that comes up there. So looking ahead there, Wednesday, there you go, 2 p.m. Fed interest rate decision, 2:30 Jerome Powell on Wednesday, May 7th. is when he comes out and talks to us, and we'll see what exactly it is that he has to say. If we move into May 8th on Thursday, jobless claims, we want to watch for that because the numbers that we got today were actually a little bit high for initial jobless claims. Continuous jobless claims also a little bit high, and that makes the market a little bit more nervous about unemployment and non-farm payrolls tomorrow at 8:30 a.m. And if we trickle into May 13th, lucky number 13 is where we get CPI. And then following that on Thursday is where we get PPI. So those next inflation reads that we get, remember, one of the pillars is that we get subdued inflation, which is what we got so far. We got to be careful with negative numbers for inflation because that's deflation. And what we want for deflation is we want that to be because of productivity, not because of economic weakness. So we want economic strength and competition to drive down those prices and to lead to that deflation. That might not necessarily be so bad. But we do want to watch those numbers that we get for CPI, for PPI. We want to see those numbers stabilize and stay subdued. That would be a big shiny pillar for propping up markets. Maybe that could be something after time that leads to easier monetary policy. That would shine up another one of those pillars, which could lead to that strong GDP because of that easier monetary policy, easier access to capital, more investment funds going out there, more consumer activity happening. And then that also contributes to a stronger labor market, which is that fourth pillar. So there's 4 shiny pillars that we're looking for. We just need that evidence to come along. So guys, I've gone on a little while now about the catalyst that we have coming up. Tomorrow at 8:30 is a big day to watch. And now, mind you, some of the plays that I have out there today capitalized on 61% on a Bitcoin play. That'll be one of the charts that I show on there. Transaction that was shared when I made the purchase and when I closed it out over at the Discord. Links in the description. Join that earner tier if you want to see that. And you can also see other products and services that are over there. Also, I had another Bitcoin position out there that I locked in at 32%, which is a larger position. That was also very nice. And then getting into the close, I was setting up my short hedges for tomorrow. And well, I'll show you the charts on it. I'll tell you what, that one, I locked in 47% gain on one of the call options that I had on SQQQ, leaving the other one ride. Super aggressive play, by the way, just in case we get that weakness tomorrow. That thing might go up by multiples if we do. And if not, I'm down to just add a few bucks because I'm only risking about 25% of my initial investment in those, given the profit that I got on the first option that I sold. So let me put up the charts for you. Like I said, guys, you want to see those transactions, the other panel experts over there as well. You guys can see that using the link in the description for the Discord. Sign up using the earner tier. Just check out all the products and services. They're pretty much endless for what's over there. I'll tell you more later. In the meantime, the call option I purchased probably right around in this area right here through SQQQ. Mind you, this is QQQ that we're looking at. So I purchased a triple leverage inverse ETF that expires tomorrow for that aggressiveness. And we got quite a bit of a sell going into the close, being even lower now. We'll see where it opens. You can see just how worried the market is about tomorrow's numbers, looking for really excellent positioning just in case tomorrow's numbers are actually pretty stellar. So non-farm payrolls staying up pretty high for us. The market's looking for it. And then also the market is hoping that we get an unemployment rate that happens to be 4.2% or below. That should take some of this downward pressure off the market. So we'll watch and see if my short hedge prints or if it's my longs that do instead. So let me go out to the daily chart on this so we can see what's going on. And you can see we left a little gap here right now above. This is the 50 coming down this way. The 50 SMA is coming down this way, simple moving average. This is the exponential moving average. We're above both of them, but we're still below the 200-day. So overall, this is bearish with some near-term reasons. All these other moving averages, 5, 13, 20, 50, 50, EMAs, SMAs, it's a mixture of them. I don't normally leave them all up, but I do just want to show you this tangle of moving averages. The only one that I have that's up here that we're not above is the most important one to get above for longer term bullishness, since that's the 200, which we still happen to be below for right now. We would like to see a recovery in that GDP number. We want to see strong non-farm payroll number. We want to see a strong unemployment number. When I say strong, I mean strong for the markets, not we want high non-farm payrolls. We want to see that number up. We want to see an unemployment rate down. For bullishness in the market, that's the bias that I normally talk with. So if I want my short hedge to print, well, then I want the market to absolutely tank, building up my cash position, building up that alpha so that I can put even more money into my long-term positions, my high conviction plays. So for SPY, pretty much the same thing as what we have here as we had for QQQ. And if I take down the simple moving averages, you see we're above the 50, we're above the 5, we're above the 13. This is all near-term bullishness, including the RSI, which is down here, also being up above 50 and above its moving average, which is a 14-period moving average that I have here on here for you. We're up above that as well. So having the RSI above 50, bullish. Above all these, also bullish. Getting them to cross, getting the 5 to cross the 50, 13 to cross 50. I said before, I'll keep on saying it, also bullish. Taking those down and putting up instead the simple moving averages. Look at that sitting on top the 50. That is a good sign, just so that you all know, but it does allow the market to be nimble and move in either direction. Post-market pushing down below that just a little bit. That's that light little blue line you see across your screen, which happens to be down below this 50 moving average. IWM closing just below. Man, it was up above this white trend line, which, remember, this is part of a massive bull run for the Russell 2000 stocks going all the way back to 2009 to present, which is where this thing built up, comes to life under the green, dies above the red, lives in between the green and the red, spends a lot of time between the white and the yellow. So I even have it color coded for you here. So let me bring this back up. We're looking at simple moving averages here along with those trend lines. Closed just below this one, above the 20, near-term bullish, above the 50 for RSI, near-term bullish, but down below the 50 and 200, and all the faster moving averages are down below the slower ones for the 200, the 50, and the 20 that I have up here. Now, if I put those down and bring up the more near-term price action moving averages, we had that cross going all the way back, the 5 over the 13 on April the 24th, but we didn't get the 5 to cross over the 50 or the 13 to cross over the 50 yet. Those would be the big ones if we have strong numbers tomorrow, strong for bullishness in the market, and I've gone over those before. I think tomorrow's that day that we could break up above the white solidly and go retest that 50 EMA that we have up here. And so let's get into Bitcoin. All right, so here's what we got going on for Bitcoin. Maybe you watched my morning video, maybe you didn't, but this white line going across the screen that you see right here is the raise that I've talked about probably a month ago or so. I'd have to go back and look to see when exactly those videos happened. We closed up above that. Now, mind you, because we closed up above that ray, well, I say close like it's the market that we're looking at here, but if we can stay up above that ray, that's a very bullish thing. The next ray is actually up here, but it's in a very light gray going across your screen. You might not be able to see it. That happens to put us, if we go over to tomorrow, right square at like $100,000 per BTC when we look at the chart that we have in front of us. That's if we can make it up there. The volume was decent today. The RSI just under the overbought status that we have. This is a nice little bull flag or bull pennant look because we have sort of tapering and pointing, and then we broke out of that today. On half decent volume, and this is where I made that 61% on the day trade today, and then I also had a trade out for a few days, highly aggressive on that one too because it was a May 9th expiration, bought it earlier this week, posted it over at the Discord, and then cashed in on it today. I think I got stopped out of both of those as a matter of fact, but 61% profit on the day trade and then 32% on the longer term option that I had out there. So Bitcoin, I opened up just before the market closed, put it out over at the Discord, just one more little hedge to move back this way to kind of counterbalance that short hedge position that I had on the Qs using SQQQQQQQQ. I know it's only 3 Qs, but gosh, S with the Qs, I think is the way that Stockmo says it. Personal friend of mine, great guy. I've known him for, 17 years now, and I'm just glad that I met him. So when you click the links, you see Stockmo Academy, you see Stockmo for the Discord. Not only do we have a commonality with the education side of things, but also a very strong passion for finance, bring news and information for you. So just in case you're wondering what that connection is there, it's a business relationship, but it's even deeper than that. It's more like a brotherly relationship. And let's move on from there. So for Bitcoin, we could absolutely still come up and try out 102, 102,000. That would put us up above this other ray. And just because I mentioned the rays, I'll show it to you. There we go. Here's what they look like. I know it's kind of light on your screen, but there they are, making this nice little fan structure, really providing us with excellent evidence of support and resistance. And man, they just keep on working. So use them if you want to. I have that posted over at the Discord as well. And then Crypto Will's over there. He happens to also very much like that. He tracks pretty much exclusively the crypto markets that are over there. For me, I do a little bit of the highlights for crypto. I really do general market stuff. So if it's stock market, bond market, crypto market, you name it, I like to cover it. I'm interested in pretty much anything mathematical, finance, you name it. I'm a big old nerd in that way. really like fantasy fiction as well. More of a Tolkien nerd than a Star Wars nerd. I know sometimes there's overlap, but not for me necessarily. Space, sci-fi, and we don't necessarily always get along. Guardians of the Galaxy is about as close as I get, but enough of that. So let's just take a quick look at Tesla, because man, what a wild day for Tesla. So are they keeping Elon? Are they getting rid of Elon? It was like, well, that's a fake story that Elon's stepping down. And is it a fake story though? And the speculation just keeps on going around and around for that. I'll wait until official word comes out. I think Tesla would do best under Elon, and everybody's going to have their position on that. He really is somebody with drive and ambition, and he really just knows how to get the productivity out of people. And having that vision that he is unrelenting about, even if it doesn't necessarily make people the most happy to do that, who might work for Tesla, and all that kind of stuff's debatable. I think overall he's a net positive for Tesla. And man, we just need to see, I think tomorrow, non-farm, I think all the catalysts that we have for the market and eliminating the risk of recession is what Tesla's waiting for. I think that's the biggest thing. All the Elon drama aside from that, I think that Tesla would really do well if we see that market strength come back to things. So guys, I'm going to wrap things up and put a bow on it. If you haven't joined the Discord, you absolutely should, because there's a whole community, thousands of people. They're all working towards financial freedom, working on building alpha in their portfolios, looking for opportunities. The panel experts, which I'm part of, where they're providing our insight and our guidance that we have over there. We share our analyses, we share our buys and sells, you name it. Like I said, there's the bread bot that's over there. You have AI tools, advanced charting tools. There's options, crypto, general stock market talk. And I don't have time to list them all. You guys would be much better off to read it just by clicking the link and looking at everything that the earner tier has to offer you, because you get unrestricted access to the Discord for everything that community has to offer. And if you guys want to learn on technical analysis yourself, learn how to trade using the bread recipe, which I personally use, and then also how to trade using options, how to work with options, which I once again personally use to build alpha in my portfolio and really build up my ability, my cash pile that I have to do that investing in my main portfolio. The coursework is down there as well through Stockmo Academy. Click on the link, bundle the courses for a lot of savings. And then if you use code word doctor for any combination of courses or single course that you happen to get, you're going to save a ton of cash that way as well. DOCTOR. Thank you very much for watching, everyone. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. I'll see you next video.